I guess we can start. I'll have a few questions, and then from there we can jump into the one-on-one. I just want to know kind of what your experience is first, and then kind of go from there. How did you get into trading in the first place?
So I've just kind of seen videos on like Instagram and Facebook of mostly like signal providers, people showing that obviously they make a lot of money on their signals that they offer daily. So just out of interest, because obviously of lockdown, I thought let's give it a go.
Yeah.
So that's how I actually started, and I signed up to a few signal providers, and it started off well, and then it kind of went south. And then, but I kind of started to I want to get to learn this bit more. So then instead of looking for signal providers, I was looking for ways to kind of just to what tools are out there to kind of help me understand it better. And then actually BFT showed up on my Facebook.
Learn through just signals. It's good to, I guess, if you have some experience, it can give you a good insight on what pairs to look at. But just, purely signals rarely work out for people. Like I've tried them too when I started. And I think like most people, they try them out when they start. But I would say 80% of the time they fail.
Yeah, no,
So
that makes sense.
when you found the signals, did you go live right away or did you start on demo?
No, so I went live straight away. I didn't even think about demos. So yeah, and I made first few days, I was actually making a good amount of profit, and then I had about a week worth of losses, and that kind of actually killed my account almost.
Mm-hmm.
So I think in that week, I think I must have lost about a good couple of hundred easy.
Mm-hmm. Yeah, that's a pretty common mistake, I guess. I mean, it could be from the signal provider, it could be you too. I don't know how you're managing your risk and stuff like that, but yeah, it is what it is. I always say, if you lose money, that's your tuition. Like if you go to university or college, you pay the college fee. And trading, the fee you pay is the loss of an account or something, right? So comparing the signals to Breakfree Trading, what's the difference there? Why do you like the Breakfree Trading approach more?
So first thing I'll probably say is that I'm actually making decisions myself on when to make the trades, and all the tools, the videos, and obviously the community chats, it's helped me to understand when I should go into a trade and what probably looks good. So it's giving me the tools I need and kind of the thought process behind it of, okay, that's a good setup. It's giving me the knowledge, just like you just mentioned right now, risk management. That was not one thing I was ever discussed at any of the signal providers. So where they put in trades of like 0.1 lots or 0.5s or 1 lots, I was trying to mimic that, which clearly I should not be doing.
Yeah.
So I've learned that now as well. So I think one of the main things would definitely be the community chats. I think I've learned a lot through like your webinars and just speaking to experienced traders in those chats, then as well as the videos, and that's kind of been quite good actually.
Okay,
and it's
cool.
kind of shown as well because I'm doing quite well so far.
Yeah, you're doing quite well. And like for me, like when I started out, the first year was, didn't make any money at all. I mean, like a typical trader who just kind of learns, as they go from their own mistakes and didn't really have a proven system, it can take, 2 to 5 years to actually have consistent results, right? The good thing with Breakthrough Trading is, it shows you the levels. If you're trading strategy mode or X mode, it's a very systematical way to trade, right? These are the levels. It's not, the levels are not going to be different all the time. It's always the same thing. With trend lines, if you're drawing your own zones, if you're drawing Fibonacci levels, there's so many different ways to draw trend lines. It's always different. The way I draw my trend lines is going to be different the way someone else draws theirs. With Breakthrough Trading, it's the same thing over and over again. You just got to learn how to exit, how to enter, how to manage your risk, how to manage your positions, the kind of the fundamentals, I guess you got to learn, and then you're pretty much, you can trade. if you go through the traditional routes of trading, learning all the ins and outs of price action, waves and harmonic patterns, there's so many different like variables that come with it. It takes a lot of time and a lot of skills to really understand it. That's what attracted me to BFT. It's just this is just a very simple approach to trading, and that's pretty much pretty much all you need. So you've been trading for how long now?
Just about 2 months.
2 months. Okay. So what's holding you back right now? What are the biggest problems you're facing right now with your trading? Are you still using strategy mode, or are you looking to move into X mode? Tell me a little about like what kind of steps you think or kind of the things you feel are missing in your trading.
So I think one thing would be just really knowing when's a good, what should look like a good trade. So sometimes I would look at something, for example, EuroCAD was an interesting one. Thought doesn't look right. It looks like it's repeated many times, and then it's kind of kicked off nicely today. So whoever was in the trades, they're doing quite well.
Mm-hmm.
So it's really just trying to understand what trades do look good, except for the obvious ones where we can see there's not been too many repeat trades.
Mm-hmm. Okay.
Because I'm right now mostly on the strategy. I'm doing X mode on demos and through doing replay mode.
Mm-hmm.
Just trying to learn that side of it at the same time.
Okay. Yeah, I mean, there's no 100% way to figure out if a trade is going to go well or not. If we know it's been repeated 3 times, and we got to make a decision if we want to take it or not. That's where that system comes in, where we follow the rules. And it's even the system's not 100%, right? But having a set of rules to follow allows us to minimize our losses and maximize the profits. Even let's say with your CAD, even though it's been repeated a couple times already, we say, okay, I'm gonna sit this one out because it's been repeated so many times. It helps us stay out of the market, right? Even though we missed this opportunity, in the next 5 trades, maybe it saved us money, right? So for this specific situation, I would kind of go back to the mindset. You don't have to take every trade, and it's important for us to stay out of the market when these set of rules have been hit. For example, not taking the trade if it's a third or fourth time, because even though you might miss some trades, on the long run it'll help you filter out the bad trades, right? Does that make sense?
Yeah, no, it does.
Yeah. So don't worry too much about missing trades. You might have missed this year CAD trade, but the next week, there's going to be a lot of more trades that you could take. And I mean, in terms of picking out good setups, I mean, if you're trading strategy mode, that's pretty much a no-brainer because it tells you where and when.
Yeah.
Yeah.
Simplifies it quite nicely.
Yeah. If you're going into X mode, I mean, that's a whole conversation. Do you have problems picking good setups with X mode, or do you have a pretty good grasp on that?
No, I'd say I probably still do have problems. So mostly, I guess I'm using it on the 1 day, and I think it's really what direction do I go after it hits the neutral zone, or if it's a bearish market but it's on the support zone, can I go for a long, or is it not good? Because I know you should go for the overall trend, but sometimes if it's 100% alignment, can you still play that card?
Yeah.
And so yeah, so I've just been trying every aspect of it. So if it's in the end zone, if it's in the neutral zone and it's just broken below it, then I'm gonna try short, just see what that happens. And I'm just kind of watching to see what happens. And so far, I wouldn't say it's been as great. I think I've probably out of 10 trades I've made, or 2 of them have gone well so far.
Mm-hmm. Okay. I think the one thing I've realized in my trading journey is most people, they find, they think, when should I get in? I kind of like to flip it, and I like to think, when should I stay out? So when should I not take a trade? That really helped me in my trading, because then I'm not going with the masses, because the masses are thinking, they're always looking for places to enter and exit, right? I'm looking for when I see a setup, and for me it looks like a buy. I'm thinking, okay, why should I stay out of this trade, right? Maybe this doesn't make sense, or maybe this is another risk I need to look at. So when I see a buying opportunity on XMode, I look at the things why I should stay out of the trade, and then I compare the kind of the pros and cons of the trade, and figure out if it's a trade I should take. So because you said you're having problems knowing if, for example, if it's a downtrend, if you should buy it, right? Or is that correct?
Yeah.
Yeah. So if it's a downtrend and the X mode gives me a good support level to buy, I'm gonna look at, okay, this is my support. How much room is there below the support to drop even further in case it goes below my support level? Does the risk to reward ratio make sense? If the risk to reward ratio doesn't make sense, then I'm not going to take it at all. If I see there's a support level and there's a big extension on the 4 hour or the daily, then there's a high probability that this trade is going to go up. I can at least close the trade at break even, right? So that's a good that's a good risk I'll take, because then I have a high probability of closing the trade at break even, because we know extension 1, extension 2, they have a high probability of a reversal, right? So that's one thing to look at. So always comparing, doesn't make sense to take this trade. Why shouldn't I take this trade? Because most people, they look at it and they think, why should I take this trade? I'm gonna go from the perspective why I shouldn't take the trade, because then I can filter out the bad ones. Because the thing with trading is, well, once you kind of learn how to think outside of the masses, then you can have a lot more winning trades. Even with the way the algo is developed, the strategy mode, it kind of has the same thinking process behind it. That's why you see those big moves on the TP points, on the entry points, because that's where a lot of the retail traders either lose money, or big institutions come into the market, or either close their trades. Yeah, that's the biggest thing I can tell you based from kind of the psychology side of things on that. We can go over charts, but for these one-on-ones, I try to stick to kind of more the psychology to it, kind of the thinking process behind things, because I feel like those help a lot more as a trader, because the X mode or the algo, it tells you when to enter, when to exit. So that's the easy part, but knowing how to manage trades, how to when to what kind of confirmations to look for. Those are things that I think are more important.
Yeah, agreed.
So when it comes to trading, are you having any psychological issues that you might need help with?
Don't think so per se. I'm really sticking to the process where I'm just letting the process the trades, keeping an eye on them, and then just letting them run.
Mm-hmm.
I don't really close trades early, unless it's just, if I did one today actually, only because it just hit TP and it looked like it was about to go for a rejection. And something similar happened yesterday, so I thought, okay, it looks like it's a repeat. But then it turned out to have a breakout, so it broke actually higher, which is quite funny. But otherwise, I tend to just stick with the process. So I'm placing my trades, just letting them run, let them hit the take profits, and then just moving my SLs to break even as well.
Okay.
So I think in terms of the mental aspect, just knowing, don't worry about drawdown, just let the trades happen. You're gonna and knowing that I expect I'm gonna have some losses, but that's kind of, as you said, it's kind of the fee of the game. You're gonna win more than you lose. So
Yep.
Just have to kind
Nice.
of accept that.
Do you have you ever closed trades and then they moved into profit more? I guess is that what you did today?
Yeah, that's what I did
Okay.
today.
Do you remember the time you closed the trade at? Was it like because yeah? Do you remember what time it was?
I can check right now. It was pretty much. I was around midday, I'd say.
Okay. Do you know the minute?
Sure. Let me find out. It was okay. Here you go 3:33.
3:33.
Yeah, my UK time.
Okay,
PM.
33. Okay. Yeah. So if it's like 33 or like 25 minutes or let's say 10 minutes into the hour, what I do is, because what I've noticed my trading is the way my emotions work me is I would get out of trades before basically I went out of the trade and then went to the profit more, or then it went back into profit. Let's say it was a drawdown. If I would have waited another hour or another 15 minutes, I could have either lost less or made more. So what I found in my trading, whenever I want to close a position, I wait for the candle close. So if it's really close to a 4-hour candle close, I'll wait for that 4-hour candle to close, and then see if it makes sense to close the trade. Because in that time frame, a lot can change, and it kind of helps me stay in a trade and not make a decision based on my emotions, but rather make a decision based on what the data, what the price is telling me on the chart. Because
All right.
things can change so quickly in just an hour. So if there's an hour left in the 4-hour candle, I'll wait for the 4-hour candle close, and then if I see it closes below support in my buy position, then maybe it makes sense to close it, right? Because then I know, if we have got a strong close below the support zone, then it's going to keep moving into the next level, basically. Not all the time, but most of the time that's the case. Then you could wait for the retest of the level and then close your position, right? Or even when I want to enter a position, trading XMode, and it's a manual enter, I wait for the candle to close. So if it's, let's say it's 11:55 a.m. in the morning, and when I go into buy, I'll wait another 5 minutes for the 1-hour candle close. Once that 1-hour candle is closed, then I'm going to look at the 1-hour candle again, the 1-hour time frame. I'm going to see if that trade still makes sense. If it closed below my for example, I wanted to go into a buy on a support level, but it closed below that support level, I'm not going to go enter a buy. I'm going to wait for price to move back into above my support. I want to have a solid candle close above my support, and then I can go enter. So waiting for those candle closes really helps you either stay in the market or stay away from the market. So maybe today, if you would have waited another hour for the candle to close, another 30 minutes, that might have saved you some, not saved, but it could have made you more profit.
Yep. Yeah. Another £10 to be exact. Something like
Yeah.
that.
Yeah.
No, it's a good. Okay, I never thought about it like that.
Yeah, I mean, it's not 100% thing to follow that's going to work every time, but it's gonna make you more patient over the long term. And what the thing with trading is, like, the more patient you are, the more you're basically, the more money you can extract from the markets. If you're very impatient and you make decisions based on your own emotions and not what the chart is telling you, then it's going to be hard to extract more. And the beauty with XMode is, because it's so systematic, the levels are always the same based on certain rules. It's very easy to make decisions because the levels, they work, like they're proven to work. So if I see price is trading below my resistance in a buy, and I get a rejection resistance in my buy, I'm going to close it because I know it's going to drop more. And then from there, I can buy again when it's lower, right? And when you have that trust with the algo, and you know over a period of time it's going to work out, and you have those set of rules to wait for certain things, wait for certain confirmations in your trading, whether it's the hour or the 4 hour candle closes, the engulfing candles. I mean, there's too many different things you can look for, but once you have kind of your own set of rules, then it really becomes easy if you follow the XMode levels. Because if you start to implement different things, let's say now you learned how to use Fibonacci's, now it's another thing to consider when to enter or exit a trade. And the more variables there are in your trading, the harder it is to trade. And
Right.
if you use X mode, it already calculates all those levels for you. So you don't have to do the thinking, trend lines and Fibonacci levels and all that. And actually before Breakfree Trading, I've used quite a bit of trend lines, but when I looked into X mode more, it just doesn't make sense to use them. Like, it's so much easier to just trade with one thing and then that's it. So I just wanted to let you know that as you progress in your trading and you begin to learn more other tools, it's not, it could benefit you, but then also it could hurt you more than it could be good for you, if that makes sense.
Yeah, no, it does. At the moment, I've just been using trend lines and obviously the horizontal levels.
Mm-hmm. Yeah.
So I've tried to keep it simple.
Yeah. I mean, the best thing probably you can learn is just the structure of the market. So understanding, higher lows, lower highs, higher highs, lower lows, different types of candle formations. I mean, I don't really use those either. The only really candle I look for is engulfings. So if I see a nice bullish engulfing away from the 100% support level, that's a good buy. Like, I'm gonna go for those every time. And then you can have you can have dojis, you can have star candles and all that. I mean, I don't even know all those candles, and to be frank, I don't have to, because like I said, the more you know and the more variables you put into your trading, the more information you see on the chart, and the more patterns you see in the chart, the more confusing everything gets. That's my opinion. Maybe someone else can have a different opinion, but that's kind of what I've taken into my trading.
Yeah, no, that makes sense. Like, it's just some of the charts that I've seen, it just absolutely confuses me. I don't know what I'm looking at sometimes.
Yeah.
Just too much going on.
Yeah. And then, for me, like, when I see those charts, it makes sense for me because I know that how to read it. But my brain just picks it up. They're like, this is what you have to look at. This is what you have to look at. And then all of a sudden, even though these three way of analyzing charts say buy, but then there's this trend line saying no, it's actually a sell. Okay, well, like, is it a buy or sell now or not? But if with X mode, it's the same thing over and over again. It's a support, you buy. If it's resistance, you sell. If this level gets broken, if 100% alignment level gets broken, there's going to be a big push to the upside. Like with, I don't know if you saw the chart today with NZD-USD.
Yeah.
A big 75% alignment was broken, and then we had a huge push to the downside. So whenever a big level gets broken, like 100% or 75% level, you're going to have a big push.
Okay.
What else are you kind of do you need help with in your trading? Is there anything specific that you want to go over?
Probably one thing right now, which is the right way to identify repeat trades. So just a conversation in the chat, for example, is I've always assumed if there's been a big break and then it's been leading up to around the entry zone, that's when you should start to consider it's a repeat trade. But I know some people have said you can't look at it for always like that, because that could be a 3 or 4 months worth of levels going in and out of the entry zone level. Then you're never going to be trading after. So what would be a good rule of thumb, like 1 month past the entry zone or 2 months, or is there something key to look at, like a big wick, and then from then onwards?
Okay, let me open the chart. Can you see my screen?
Yep.
Okay, perfect. Let me disable XMode and enter strategy mode. Okay. So you said your CAD at a repeated trade, right?
Yeah.
Okay, let's have a look at that. You trading daily?
Yeah, only on the daily.
Okay. I mean, so this one, for example, this one wasn't even a repeated trade today. So this is still the same entry that you should have open from, when was this? 11th May or the 8th May. May 8th. Because when you look, even it didn't touch the entry again here. So this guy is actually going to go to TP2. So the ones that have still had that one position open on this repeated trade, they're going to go to TP2 now. If it closes above this level here, which might happen. We'll see. So this one has hit, let me see, here, this once, twice, 3, 4. Yeah, so this is around 4 times, I'm guessing. Yeah. So your question is how to identify repeated trades?
Yeah.
Okay, yeah. So as you can see, this one, for example, in the short time frame like this, between April and May, we can hit it 1, 2, 3, around 4 times, right?
Yep.
The problem is when you go back, like someone said, like it's gonna be hit so many times, right? So you can't go back too far. The way to kind of look at this one is we can see this here was our resistance for a long time, right?
Yep.
So we can see it broke and it broke below it. So it was support, but then it turned into resistance. We can see a rejection here, and then it went down, and then here we can see it went up, and then here we can see it just kind of blew through it, right? So now this big support zone, or sorry, in this case resistance, this resistance turned into support, right? Because you can see it broke through here, and now it came back to retest it. So it's a new, like, even though this level hit so many times here, it's no longer short, it's a buy, right? So it's a new level because now the sellers went into buyers. Eventually, like if this zone gets hit too often, many times over, eventually it'll break, it'll go to the next zone. So we don't know how many times it can hit. Usually it's 3 to 4 times, but you can have more hits. We can't really tell, right? But in one way you can see if the zone is still strong is by looking at how big the moves are away from the zone. So here we can see we had a maybe it's more clear in the 4 hour. Let me look. Yeah, so we can see the wicks. So here we can see a long wick, and had a big push up. Here we had a lot of wicks too. We had some wicks here too. Basically what the wicks mean is price went down into the zone and it touched the zone and it went straight up again. Like it went up quick enough that it basically left a wick. So now if price comes back down again, if there's no big reaction to the zone, then that means the level is weak and it's probably going to break it. That's why in X mode, when we say wait for a punch through, if we see punch through and back down, that means the zone is strong. For example, on UJ today, USDJPY, if I go into the 1 hour, we can see on this alignment level, 75% alignment over here, we can see a lot of wicks, right? Punch through, went back down, punch through, went back down, punch through, went back down. The sellers were strong enough to keep price pushing down, and you can see, and then from here it moved down, right? So now if price moves up again, and we don't see a lot of rejection on this level, it's going to break through and then go to the next level.
Right. So I should be looking out for the wicks on the, I guess, the resistance or the support zones.
Yeah. You want to wait for straight punches through and then out again.
Okay.
So here, same thing, right? On this support level, you can see it punched right through the zone and then back up. Like this is a strong rejection. These are all strong rejections. Where price like punches through and then right out. And then you have things like this too, where you don't have a big wick. But then maybe if we look into the 4 hour, here in the 4 hour, we can see that wick, right? And then this is you're probably going to see something on the daily maybe down here. Well, not really. Yeah, I mean, you're gonna have some of these. You're gonna have some of these. That's just the markets. There's a couple of ways to think things work, but where price kind of moves through, gets a strong rejection, moves up. Those are the best levels.
Right. So is it then good if I do draw my support, neutral, resistance zones on a day time frame, then move to the 4 hour so it's a better, clear picture of how strong those zones are from the candles?
So if you're trading the daily,
yeah.
Preferably like if you're trading the daily, let's say this is your support here. If you're trading the daily, I want to wait a daily close away from the support, So if this is for support and I see this daily kind of close and it closed above, I'm going to enter a buy next day, right? Or let's say if we go to USD/JPY again, maybe. Oh, let me go to EuroCAD actually. So in EuroCAD, right? If I see a bullish close on the daily, high chance next day is going to be bullish as well. If the bullish close is away from a support zone, right? So here we can see a bullish close. Next day is bullish. This guy is going to close bullish today. On Sunday, Monday, it's going to retrace a bit and then move up to TP2.
Okay.
So I would stick to the daily and wait for the daily closes. A lot of times you'll have something like this. This is where sometimes people get faked out. You have a bearish kind of close and then a bullish close. And some people, you might get in on this for buy because it's sitting on support. But then you can see price go a little lower and then it shot up. So that's kind of where the stop loss comes in, putting your stop loss at the right place. You could close this trade here too, like if it breaks your previous support and then close here and re-enter there, but it kind of depends what your style is. If you're trading strategy mode with limits, then it's that things are going to be a little different because you're not going to be entering yourself, you're going to be entering with limits. So in that case, you just set your limits on support, and support levels have a high probability of reversals. So you just kind of go with that. And then you look at the end of the day, if you see, the confirmation isn't there, then you can close the trade. Or you can move the take profit, a stop loss to break even.
Yep. Gotcha.
Yeah, but if you're trading daily, I mean, you can still go into the 4 hour and look for rejections here too. But in most cases, you want to wait for the daily the kind of close on daily. That's going to give you the best confirmation.
So is that same theory should apply for even if we're just doing the strategy mode as well, or not really necessary?
Not really necessary. I mean, you could if you want to. So what you could do is, if you see a bullish kind of close on a long end chart, once you see the kind of close, bullish, you can then place your limits on the box, because in most cases it'll actually go back down, retouch the entry box, and it'll go back up. Let me see. You can see it here, but let me see if we can find another example. Okay, so this one was a doji, not the best example. Maybe GJ. This one not. This one is repeated trade. Yeah, so can't find any right now. But a lot of cases, when you wait for the kind of close for the daily, then sometimes you get another wick up to grab liquidity. You can get the entry, and then it'll move down. Or you can then enter with a manual entry if you want, like once you have the confirmation. But for these trades, I would just do limits, because there's such a high probability reversal zone. There's a high chance it's just going to reverse. If you're doing repeat trade, then that's where you can do that strategy. Just wait for the kind of close, and either set another limit for the retrace, or just enter manually once you have the daily kind of close. That's how I would do it. But in most cases, you can just place the limits, and that should be good to go. Because if you look at the XMode levels, like they're in most cases they're pretty like, how should I say it? Like they play out, I would say, most of the time. So I think, yeah, that's what I would do.
Cool.
I think we went on a little tangent there about the repeated trades.
Yeah.
Yeah. I mean, for the repeated trades, your original question was how to identify, like, how far back you should go.
Yeah.
I would go, within the last couple of months. For example, like this Euro CAD one was May, April,
March, I think.
March, yeah. So you can go up to March, yeah. If you go past, that's going to be too much. But you want to look at the most recent data, because the algo already considers everything else. You don't have to look at that. So just look at most recently, how many times has price hit that point. On a daily, it's going to be the last 3-4 months. In the 4 hour, that time frame is going to be lower, of course, but that's how I would do it. If eventually the algo is not going to show it anymore as soon as it breaks this, but as long as the zone holds, like as long as the support holds, you can trade it. But just keep in mind that after too many touches, it'll break eventually. Yeah. Or if it holds, eventually it'll move up and then create a new high. It's going to be either a break or it's going to be creating a new high. But I would still stick to the rule, because the rule will save you money long term. If it's a third or fourth touch on the zone, don't go into it unless you made money on the first or second one. Then it makes sense. Because long term, based on the stats, that's gonna be the best plan. But I mean, on the daily, the good thing is on the daily, the zones are a lot stronger, right? Like if you look at the 50-minute, levels get broken way more often than on the daily. So the daily levels, they're gonna hold a lot longer than one on a 15-minute. Yeah, this is going to be, I think this is going to be a big pop to the upside, actually. Like youre CAD, I think it's going to go up more. We'll see.
So keep an eye on that one then.
Yeah. Yeah, it'll just take forever to play out daily. Yeah. I mean, if it does, the algo is probably going to tell us to buy. I'm assuming it'll have to break this high. Right? It'll have to break this, move up, come back down. Once it's up here, the algo might show a buy somewhere here.
Okay.
Yeah. We'll see.
And that would essentially be a new trade.
Yeah, that would be a new trade. Yeah.
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 Sweet.
I mean, if you really, if you want to bet long term and you really made money in these first ones, you could go long on this position, close everything on the first one, and then keep the last one open, until it goes up higher. Because if you go into X mode, the next level, this is the next resistance level, big one. So this is TP2. I could break it and then move to this one, this resistance level. Okay. Yeah, I hope that makes sense with the repeated trades. You don't have to go back too much. You want to look at the recent data, because if it holds recently, it's good. It means probably it's still a good zone. If you don't see a big rejection from it, then you shouldn't enter. Or if you see a doji candle, like if you see something like this, where the bottom wick and the bottom and the upper wick are the same length, and the body is in the middle, that's a doji, or like basically a indecision candle. So price could go either up or down. Most cases it'll go out the same way it came in. So here you can see we have a bearish engulfing doji consolidation, and then it came up bearish too. And then if you look at okay, this support was holding good. This one's not really a doji. Here we're going to another consolidation. You can see bearish engulfing, consolidation, and then continuation. I think NZD USD had the same thing today. Let me check. Okay, not quite a doji, but similar. So you can see bearish, consolidation, and then bearish. Same thing, bearish, consolidation, bearish. If you see like a very choppy market, like if you look at that in the 1 hour, like this consolidation, like it looks confusing, right? But if I look at it on the daily, which I did today, I was like, oh, okay, looks like a good consolidation. So it's going to break lower. It's going to break support. So that's why I always like to check all time frames, because the high time frame always gives you a much clearer picture than the lower time frames.
Okay, that makes sense.
Yeah. Okay. Any other questions for me?
Yeah, just one thing I wanted to go over, which was one of the trades that I lost on. Just wanted to see if you had any thoughts on what maybe I could have looked at to avoid it. It was the GBP NZD. It was on the 8th of May. It was a buy.
8th of May. So what's this long position?
Yeah, it was that, and then but it broke down to a sell.
So I'm guessing this long position was a little higher then?
Yeah, I think it must have been. I think where it dropped down is probably where the buy was before. Yeah, possibly.
Okay.
Because it went into it hit the stop loss.
Okay, and the stop loss was from the algo?
Yeah.
Okay. Yeah. I mean, it's on support. There's a big level here, so it's hard to say. It's probably just one of those failed trades.
Okay.
You probably didn't do anything wrong, because it looks fine to me. I mean, there's a big buy zone here, so it looks like the stop loss. It probably just took the algo probably took a different level as a stop loss than it should have, which it happens. Even as a human or whatever, it doesn't show the level in here. Daily. Yeah, so it looks like it recalculated the levels. So it must have been a different level it took, and now it recalculated the levels. So I mean, this is probably going to be your next buy zone. So you didn't do anything wrong. That's just the life of trading. Sometimes you have those field trades. It's the cost of doing business in trading. So just keep doing what you were doing, and it'll be fine.
Cool.
Yeah.
It's good to know.
What I like about algo trading is because it's always the same set of rules, and you
Yeah.
know that if you follow these set of rules long term, you're going to be profitable as long as the strategy is proven, right? If you're following an algo that's not proven to work, then okay, then there's something wrong, right? Um,
Yeah.
but where I'm going with this is when you're trading manually, like you're making decisions based on your own analysis and your own kind of what you see on the chart, not based on a system. Then you need to journal everything you're doing. You need to journal where you enter, where you exit, why you lost, why you won, what went wrong. Um, with an algo, because it's always the same, it's much easier to see where you failed, because the algo has a high win rate. So the only really thing that could make you lose long term is, one, by not following the strategy, and two, by not controlling your emotions. Those are the two things that will make you fail when you follow a system that is proven to work, right? So when we have a failed trade within the algo, it simply means it's a losing trade. Nothing we can do about it. We move on to the next, and we don't know the sequence when those losing trades come in. It could you could have a whole week of losers sometimes, but given that it's so systematic, everything is going to be the same over a period of time. And as long as we keep following that pattern over time, we're going to have really good results. And the problem is with this discretionary trading, where you do your own analysis with a bunch of different tools. You're not going to have that systematic result.
Cool. Yeah, makes sense.
Yeah.
Makes sense.
Yeah, man. Do you anything else you want to chat about? Questions? We got a few more minutes left.
Probably just one more. Like, is there any other tips and I guess advice you can offer, just to kind of make sure I know like Asker would say, if you when you follow the algo, you have this win rate, but then when you start applying price action and thought and that type of knowledge onto it, you'll be more successful in trades. So is there anything you would suggest from your experience that would be really good to call out? Like, for example, you were saying earlier about market structure, so the
Yeah.
high highs and the low highs, but is there anything else I should kind of get my knowledge on?
I would say the most important things are structure. So understanding lower highs, higher highs, lower lows, lower highs. So for example, this is our high, and then this candle closed below this high. It means this is a lower high, right? And you can
Yeah,
see this daily candle closed below this high, which makes it a lower high again. So when I see this trend down, the high is getting lower and lower. That means we're moving into downtrend, right? So we have the lower high, lower high, lower high, and then we have this was our lower low, and then here it didn't quite break it. I'm guessing that's why you see so many wicks, because it does look a little confusing. Price didn't really know where to go, but then you can see here we broke this low, broke this low, right?
yeah,
So by drawing the trend lines, we can see, okay, this is going to be a downtrend, right? So understanding that helped me a ton, because now I can go into the 50-minute, and when I see, okay, this is my, so if I see, this is my support, and I see price moving up, coming down, and then I see, okay, I have more rejection here. You can see the wicks here. That means, okay, price could be creating a higher low, which means if I see a higher low, price could be going up more. It means I should be looking for buys. And you can draw a trend line like that if you want. Ideally, you want to see, after the higher low, you want to see a higher high as well, right? So this one, in this case, it didn't give you a higher high, but what you can look at is, in this case, price broke the structure. So that's another piece of structure in the market. When price breaks levels, the algo will probably show you this. This probably would have been like a neutral or resistance level, and you can see this kind of closed above it. That means we're going into bullish, a bullish level, or bullish market, I guess you could say.
Yeah.
So understanding that with XMode, that's going to be really helpful. So knowing when that kind of when the momentum is shifting from sells to buys, from buys to sells, that's really, really important to know for XMode. And the things you need to know for those is candles. So what do candle closes mean? And engulfing, closing above levels, below levels. I wouldn't focus too much on like the different types of candles. I don't even know them all, and I trade pretty good without them. I would say the most important one is the engulfing, and then another thing you can learn is market patterns. So market structure, candle formations, and then market patterns. So wedges, head and shoulders, descending channels, ascending channels, falling wedges, rising wedges, stuff like that. That's good to know, and that's pretty much it. I mean, that's all you need to know. If you have XMode and you understand market structure, then you pretty much good to go to trade forever.
Cool. Sweet. I guess that's where I'll probably start off with then.
Yeah, and I think in the training, that's kind of what they went into too. I mean, you have some candle videos, I believe, and then you have some support and resistance videos. Yeah. But I wouldn't go into like harmonics. I wouldn't go into Fibonacci, those or waves. Those are just secondary analysis, which you don't really need. You only need primary analysis, and primary analysis are things that purely just include the candles in the price. So candles, looking at candles, looking at structure, looking at support and resistance. When price breaks certain levels, those three are pretty much the only thing you need. Okay, perfect. Do you have any other questions before we jump off?
No, just thank you, Patrick. That was really good.
Yeah, no problem.
Yeah, looking forward to the next competition. Hopefully, I'll win that.
Yeah. If you have more questions, drop them in the chat. And then hopefully I'll see you on Monday in the next call.
Definitely. Excellent.
Okay, man. You have a good night.
Yeah. You enjoy the rest of your day.
Thank you. Bye.
Take care, mate. Cheers. Bye.